Why do banks sometimes reject foreign remittances even when all the basic documents seem to be in place? The reason is simple. Under FEMA, banks have a responsibility to make sure every foreign exchange transaction is genuine, properly documented, and compliant. In this presentation, let's understand what banks actually look for, where remittances usually go wrong, and how you can reduce the chances of rejection. Here's what we'll cover. Firstly, we'll understand why AD banks act as gatekeepers. Then we'll look at the most common reasons remittances get rejected, including purpose code and documentation issues. We'll also cover AML sanctions and source of funds check before looking at practical steps you can take to avoid rejection. And finally, we'll see how Femabide Advisorz can help. Why AD banks act as gatekeepers? AD banks or authorized dealer banks are much more than payment processors. Under FEMA, they are responsible for ensuring that foreign exchange transactions are genuine and do not involve any violation or evasion of FEMA provisions. Every remittance is also reported to the RBI with a purpose code. So if the transaction is unclear or the purpose code is incorrect, it can create compliance concerns for both the bank and the customer. That's why banks often take a cautious approach before processing a foreign remittance. Top reasons banks reject remittances. So what actually causes a remittance to be rejected? It could be something as simple as an incorrect or vague purpose code. It could be a mismatch in the name, account details or SWIFT information, incomplete documents, unclear source of funds, LRS limit issues, AML or sanctions flagged, outdated KYC or an unexplained third-party remittance can also trigger a rejection. Even a mismatch between the invoice contract and the actual remittance amount or description can raise questions. Purpose code, the number one silent killer. Purpose code is one of the most common reasons for a foreign remittance being delayed or rejected. Banks need to report the exact nature of the remittance to the RBI. The problem starts when businesses use a generic or miscellaneous code or when the purpose code doesn't match the invoice or contract. The safe approach is to select the most specific code available and make sure your supporting documents tell the same story. For unusual transactions, getting written confirmation from the bank can also help avoid problems later. Documents and name matching issues. Sometimes the problem isn't the transaction itself, it's the details. Even a small difference between the name of the SWIFT message, invoice and bank account can trigger a rejection. The amount, currency, description and party names should also be consistent across your documents. Tax documentation can be another issue. Incomplete or inconsistent forms, declarations and supporting certificates can put a transaction on hold. Most importantly, there should be a clear trail connecting the remitter and the underlying transaction and the source of funds, LRS and AML screening. For larger or first-time remittances, banks may want to understand where the money is coming from. You may need to establish whether the funds come from salary, business income, sale proceeds or another legitimate source. Banks also track LRS utilization across channels, so exceeding the applicable limit or having unclear utilization can create problems. There are AML sanction checks. Transactions can be screened against international and internal watch lists, and certain names or jurisdictions may trigger enhanced due diligence. Even account status matters. Pending KYC, dormant accounts or accounts not enabled for foreign transactions can result in holds. How to minimize rejection risk? So how can you reduce the risk of rejection? Start with the basics. Choose the correct purpose code and make sure it matches the transaction. Keep your invoice, contract, beneficiary details and bank information completely consistent. For large or unusual remittances, consider sharing the documents with your AD bank before initiating the transfer. Keep your KYC and account status updated and maintain clear documentation showing the source of funds. And finally, keep a proper compliance file with your purpose code notes, bank communications and supporting documents. How Femabide Advisorz helps. This is where Femabide Advisorz can help. We can review your remittance structure, purpose code and documentation before you approach the bank. We also support documentation including invoices, contracts, declarations and tax forms. If the bank raises queries or asks for enhanced due diligence, we can help you respond appropriately. Our support also covers LRS, ODI and ECB matters, as well as FEMA regularization and ongoing advisory for businesses with regular foreign exchange transactions. Don't let a good remittance get rejected. The good news is that many remittance rejections are avoidable. The key is getting the purpose code right, maintaining clean and consistent documentation and coordinating with your AD bank early. A little preparation before the transaction can prevent unnecessary delays and compliance concerns later. Femabide Advisorz, simplifying FEMA, amplifying growth. For more information, do reach out to us at 9933385556 or go to our website femabide.com.